our episode here and look at Dolphin Cove. So Dolphin Cove closed today at $19.30, up 51 cents from yesterday, or 2.71%. So let's talk about Dolphin Cove a little bit. So if you've never been to Dolphin Cove, think of it as a marine and adventure park. So there are rides, there are different attractions, etc., for you to be able to take advantage of. So it's positioned as a tourist attraction or something that locals can always go to enjoy. So whether it's a special occasion, anniversary, etc., and of course all the other things that you'd expect to come with the park is there. So there are restaurants, gift shops, photography. So as you go through the park, for example, one of their attraction is swimming with the dolphins. You'll be able to get photographs of that. So they'll usually take all the photos for the day for all of your activities, and then you can go and purchase from the photo shop before you leave, etc. So these are all the ways in which you're able to generate revenues. And it's a really simple business to understand once you just think about the things that we just mentioned here. So they have 5 locations in total, and of course you can find out more information on their website. So they're at Montego Bay, Puerto Seco, and then you see 3 locations within Ocho Rios. They came to market making 80 million shares available at an invitation price of $3 per share. So of course that would be significant growth from IPO to where it's at today, $19.30, as I mentioned, and the all-time high price I believe is somewhere around $30. And let's actually have a look at that right now. So I'm using a platform called Ticker here. Let me just maximize that screen. So if we look at the last 12 months, it's up 23% in the last 12 months. Actually go full screen there. If you go back 3 years, it's up 134% in the last 3 years. And I believe it was in 2022. Yes, it went to a high of, I believe, at least $31 or $32. But of course, the price close for this day was $29.45. But I remember when it was making this run up, and interestingly, of course, he had talks about it going further, and it has had a correction since back to around $13.10, and now, as at today, trading closer to $20. And so it's down 33% from all-time highs, but still, trading well in terms of considering where it was at IPO. In the last 5 years, it's up 35%. And so I think it's one of those companies that it's an interesting option, certainly as it relates to dividends. And so it's one of them that is certainly, well, I think based on where they are, how much profitability they have compared to last year, the fact that they have an interim dividend announced now that is higher than the same time last year. Well, let me not give it away. Let's finish going through the results first, and then we'll talk about that a little bit later. So in terms of their profit and loss, revenues are up 18% to $13.2 million US. Operating expenses increased by 17%, so it went to $7 million. Profit before taxes and net profits both increased by 12 and 24%, and so their net profits stand at $3.6 million US. That's certainly a significant amount. And then their earnings per share grew 24%. And this figure is in US dollars, so that's 0.0094 US. And their stock price is up 9.6% from the start of this year. So great performance in terms of where they were at the same period last year. And then, of course, when we look at the balance sheet, we see where they have 35 million US in assets that actually grew 5% for the 9 months. Their equity grew by 6% to 34.6 million US. So if you look at that difference between total assets and equity, that leaves very little in terms of liabilities. Their liabilities did not move at all, so it stands at 5.3 million US. And so, you know, their balance sheet is in good shape. There was no long-term debt there, and so, you know, the number of shares outstanding, again, I'm kind of getting ahead of myself, so let me save that a little bit for later. Cash flow from operations, a positive $3 million. That's pretty good. It did decrease though, 23% from 3.9 million US. Cash flow from investing activities decreased to $1.9 million. And cash flow from financing activities stood at $1 million US. In terms of trading, it traded between 1880 and 1940 today, and the closing price would have been $19.30. In the last 52 weeks, it's traded between $13 and $20. So if you were able to for example, purchase at the low at $13, you'd actually be up what, about 20-25% to this point. Market cap stands at $7.5 billion and 392 million shares outstanding. I actually think this is one of those companies that, based on the volume it trades, could actually benefit from actually a stock split, because the top 10 holds 95% of shares, right? So, and if you look at the top 10, I don't think that's going to change much in terms of the position in shares. And if you watch just maybe the last 3 months of trading, very, very little volumes. Last year there was I think a few million units traded, and that was about it. So very small volumes trade daily. So I actually think there's an opportunity for this stock to split at some point that would increase trading, increase liquidity for the stock. And of course, they do pay a healthy dividend currently, and that's what we're going to look at now. So they pay dividends of $1.60 for 2023, and they announced it three different times, so three dividends throughout the year. I believe 40 cents, 40 cents, and 60. No, 40, 40, and 80. That would be 160. And their first interim dividend for 2024 was 60 cents, which would be higher than their first dividend paid last year of 40 cents. So I do think with just the fact that they are very well low debt, low or no debt, and the fact that they've had, you know, revenues increasing, profits increasing, it's very likely to see a higher dividend this year. Of course, we'll see. Dividends aren't guaranteed. It depends on what the company intends to do with that cash. And so, you know, it would be great to see how things progress. And I do think that there are some opportunities there. I've always wanted to see this company maybe look at, you know, attractions maybe in the Caribbean, partnerships where they may be able to, you know, either include other services, other attractions, etc. And it's something that I think is just a very simple business model, one that has, you know, the opportunity to grow. You look at, for example, things like the number of tourists that have visited the country since it started here. I believe that is up for the first 3 months of 2024. That usually bodes well for a company like this, companies like Express Catering, and so on. So this is certainly one of those stocks that would fall into the ones that would do well if tourism for the country does well. And then, of course, the risks to a company like this would be, I guess, seasons like the hurricane season, or if there's like a pandemic or anything like that, that would present a risk to their business. You know, outside of that, it's pretty simple and straightforward. So I leave you to decide if that is a company that you're interested in or not. And so let us